Right now, some of the biggest companies on Earth are worth trillions of dollars because of a promise. A promise that artificial intelligence is going to change everything. And over the last few weeks, the market suddenly started to wonder if that promise was worth quite as much as everyone paid for it. Chip stocks that were flying dropped double digits in days. Companies that could do no wrong were suddenly bleeding. So, if this is the start of the AI bubble popping, here is the question almost nobody answers. When trillions of dollars in AI value disappears, where does all that money actually go? If you like understanding money without the hype or the jargon, subscribe. That is exactly what I make here. Because the answer to that question is stranger than the crash itself, and by the end of this, you are going to see these headlines completely differently. Let us start with what a bubble actually is, drawn simply. A bubble is not just a high price. A bubble is when the price of something floats way up, far above what the thing is actually worth today, because everyone is buying it based on what they believe it will be worth in the future. And here is the key. In a bubble, people stop buying because the business is making money and start buying just because the price keeps going up. That is exactly what happened with artificial intelligence. In the first half of this year, tech stocks tied to AI ran up something like 80%, not because they suddenly earned 80% more, but because everyone became convinced AI was the future and nobody wanted to miss it. The price was no longer measuring the company. It was measuring the hype. Now, to see why that gets dangerous, you have to understand something weird about how the AI boom is being funded. Because a lot of the money is moving in a circle. Picture it like this. A giant chip company sells the chips that power AI. It takes some of its profits and invests billions into a hot AI startup. That AI startup then takes those billions and uses them to buy more chips from the same chip company. So the chip company is, in a way, funding its own customers. The money goes out one door and comes back in another. On paper, everyone is booming. Sales are up, valuations are up, everyone looks like a genius. But if you look closely, a chunk of this growth is the same dollars going around and around in a circle, making the whole thing look bigger and healthier than it might actually be. This is what makes people nervous, because a circle only keeps spinning as long as everyone believes in it. So what happens when the belief cracks? That brings us to the pop. And this is where your money question gets its strange answer. Let us say an AI company is valued at $1 trillion. That number does not mean there is $1 trillion sitting in a vault somewhere. It means the last shares that traded, hands changing over a tiny slice of the company, were priced high enough that if you multiplied it across every share, you would get $1 trillion. It is a price built on the future. Investors are paying today for profits they believe will show up years from now. Now fear creeps in. Maybe the AI products are not making money as fast as promised. Maybe a big company admits its AI spending is not paying off yet. The next buyer is not willing to pay as much. The share price drops. And because that price was multiplied across every single share, a small drop in what one buyer will pay wipes out enormous amounts of value instantly. The company loses $200 billion in a day. And here is the twist. Nobody caught that $200 billion. It did not fly to a rival. It was not stolen. It simply stopped existing, the same way it appeared. It was paper wealth. Value that existed only because everyone agreed on a story about the future. A crash is just the moment everyone stops agreeing on that story. The money did not go somewhere. The belief left, and the number followed it down. But here's the part that actually matters for real people, because a popping bubble is not painless. When the number falls, some people get hurt for real. The late buyers, the ones who bought at the top because they were scared of missing out, they are holding shares worth far less than they paid. Employees who took stock options instead of higher pay watch their paper fortunes shrink. Pension funds and everyday investors who piled in near the peak feel it too. And on the other side, the people who sold early, near the top, walked away with real cash before the story cracked. In every bubble, the money quietly moves from the people who believed last to the people who sold first. If a video like this makes the noise a little quieter, subscribe. That is the whole point of this channel. Now, I have to be fair and careful here, because this is where a lot of people get it wrong in both directions. A bubble popping does not mean the technology is fake. When the dot-com bubble burst in 2000, the internet did not disappear. Most of the overhyped companies died, but the real ones, the ones actually building something, went on to become the biggest companies in the world. AI could be exactly the same. The bubble and the technology are two different things. It is completely possible for AI to genuinely change the world and for a whole lot of people to still lose their shirts betting on it at the wrong price. That is the lesson bubbles keep teaching us over and over. The problem is almost never the idea. The problem is the price people pay for the idea and the belief that it can only ever go up. So the next time you see a headline screaming that AI stocks just lost $1 trillion, you will know what is really happening. It is not a vault being emptied. It is a story being repriced. Paper wealth, built on a promise about the future, shrinking back down as people stop agreeing on how big that future will be. The money did not go anywhere. It was never fully there to begin with. This is not me telling you what to do with your money. I am not your financial advisor. It is just the machine, explained, so that while everyone else is either panicking or getting greedy, you actually understand what you are looking at. If that is the kind of thing you want more of, subscribe, because that is what I do here. I break down the money behind everyday life, drawn simply. I will see you in the next one.